Good morning, everybody. It's Chris from Serene Education with the four major zones update for the 22nd of November 2013. End of week, guys. Friday is upon us yet again, so quickly. But Friday nonetheless, and we've got to be very, very careful that we could see end of week consolidations as people who have been trading all week will then start to rein in some of that profit. So let's look at the four majors, starting with Euro against US dollar on the daily. Let's have a look and see what's been happening this week and what we can expect for today. So what do we have today? Friday on the Asian session, we had a slight upside after the bullish Arami here. You can see prices have taken a bit of a consolidation here at the 38.2 weekly fib. We had a lot of selling through on Wednesday, a lot of selling, and we sold from 23.6 on the weekly right down through the monthly, straight into the 38.2 on the weekly, and we've now consolidated. The actual indicator chart over here is pretty much telling us we should still be looking for longs. The institutional daily is still pretty much below price. We are seeing swing lows. Well, the last swing, you can see we have a red arrow, bearish engulfing candle here. However, if price is still not moving lower than the 38.2, then it's likely for price to bounce or consolidate. And then you can see it's now testing the underside of the 50% retracement on our monthly time frame. So here you can quite clearly see the blue line represents my 50% fib retracement or pullback level, and you can quite clearly see we've had a lot of consolidation at this level. A lot of noticeable consolidation at this level going back a number of months. So in this tight bandwidth, ideally you don't trade it between the 38.2 and the 23.6 because the monthly fib is smack bang in between all, and subsequently we're not really going to see any true genuine movement really. And what we want to see is either 23 break above and then trade the cleaner air to the upside, because price is still looking to the candlesticks and everything still tells us we should be looking for long-term sentiment. However, we've had a bearish engulfing candle on the week. That's not really great, but this is only really going to stack up if we start seeing further selling opportunities, and the 38.2 here on the weekly would need to be breached, and then we could look towards that 50% retracement level, which will bring us back to the institution level. We have a red arrow, the candlesticks are still below, RMO is still above, and the Osmo indicator above. So no true selling here because the first part of our rule has been breached. So looking for consideration in between, you can see that we're now trading at the underside of the monthly fib. So dropping down to our 4-hour time frame, you can see that price is now testing this level. You can see on this time frame we don't have a blue arrow. We would need to see a blue arrow, then the candlesticks are already blue, the RMO is above, and the Osmo indicator has just also popped up above. So you can quite clearly see here we have the R-square and linear regression. These two should be working together, and they're clearly not. This is still below, and there's no true sentiment behind that below move. So got to be wait patient here for a 4-hour counter breach higher. Look for an hourly to break above the 4-hour. Then we can be quite aggressive with our first target, which is the institution moving average above price. Fail to see any of that happen, then we're likely to see price consolidate with an opportunity for further lows to be made. So here you got to be very patient, wait for the confirmed breakout, and then trade the breakout. If not, wait for the consolidation bearish engulfing candle, and then we could test the prior lows we've just come from. Sterling, yeah, very good. You can see the daily trading within a consolidated range. Recently we had a bearish engulfing break lower. However, on the pullback we didn't find any resistance at the 23.6, therefore there was no follow through to the downside. What we did see was a bullish engulfing candle close higher at a major support and resistance level, and that is now subsequently seen price moving higher. What we have seen is the candlestick still very much blue. However, we still have a red arrow. Oh, apologies, I take that away. In between here we have a little blue arrow. Fancy that, stuck away so you can't really see it. However, you can see that the daily candle breaking and closing higher than this 4-day consolidation, and now subsequently we are now going to be heading back up to those price support and resistance level highs here at roughly around the 1626 mark. So you should be looking for nothing more than buying opportunities. Everything's looking fantastic on our daily. So drop down to our 4-hour time frame. Straight away I get a buy signal, and you can see on the 4-hour time frame all looking positive, hourly all looking positive. Blue arrow, blue candles, all the moving averages below price. RMO is very much trending, and the Osmo indicator is indeed confirming that. So you're looking for nothing more than buying opportunities. In this case, price has made some really nice movements over the last 24 hours. In fact, moving higher, broken above the prior daily high, which was here. Little pullback and then a continuation higher. So looking for nothing more than buying opportunities on sterling against US dollar. US dollar Swiss franc here, noticeably on the daily swing lows. The institution's above price, and you can see that the indicator box over here is just telling you straight away sell. So what we want to see then is clear information on that. You can see previously we did have a price support and resistance level, noticeable consolidation level here, a lot of support, breakout, then resistance, breakout, pullback, but we're still below the institution, so a fake out here quite clearly, buy, nothing here with true sentiment moving it higher, and we're still below the institution, so still negative, and subsequently we made a swing low. And if you look at it, price right now on the hard right edge, we have a red arrow, candlesticks are red, however we had a bullish engulfing candle the past couple of days, so we want to see this prior swing low now being breached to be genuine selling sentiment. Got to get below this level over here, which is roughly around the 90, 80 and change mark. You can see that we have a red arrow, red candles, the RMO is just below, and the OSMO indicator is just below. But because we've been consolidative, the RMO is going to be flat. Okay, RMO is great for trends. Yeah, when it's trading sideways, doing nothing, it's going to be flat, and that's exactly what it's doing at the moment. So for this to be a true selling opportunity, we would rather get below the 90, 80 mark and then look to those prior lows we've just come from, which is down here at roughly the 89 and 175 mark. So dropping down to our 4-hour time frame, you can quite clearly see that we have a lot of selling sentiment over here because the candlesticks are red. We have a red arrow. However, you can quite clearly see that price is still trading above the institution. So as long as it maintains above the institution, there's still probability of upside. Remember, this is just a consolidation and an uptrend just recently. However, if she's not making new highs, and the longer she fails to make new highs, she will then become more negative. But she needs to drop below the institution in order to be genuine selling sentiment intraday. And if you do get that, then we could start to target that 89.175 I mentioned below. And that's a healthy, what are we looking at here? 160 odd pips, guys. So be patient and you shall be rewarded. On to the last pair of the day, the US dollar Japanese yen. A lot of movement upside ever since that breakout above the monthly fib here. So I'm trading this particular pair. Have been in any yen crosses recently, and I am deep in profit, at least 600 pips at the moment now. But I was patient, especially on this particular pair. I said to you weeks ago, I needed to see a confirmed break above the monthly fib, and then we could start looking at highs. And sure enough, we had a nice bullish breakout, the pullback, which happens 90% of the time, as I keep mentioning to you guys. Just got to wait patiently for the continuation or the confirmation candle, and then trade the outcome. And that surely is what we've been doing. The last couple of days has been fantastic for this particular pair, and subsequently we are now in profit. So looking for further highs, consolidation on the Asian session, but looking for further highs on this particular pair as she continues to trade above the monthly fib. Look for price to test prior highs, which is currently doing right now. This high we saw in June of this year. You can see prices consolidating as we head into that. But get above that, then we should target in the all-time higher, which is at the 103.78 and change. I don't think it'll get all the way up, but it should get anywhere somewhere in between that. It just allows you then to gauge how much it is. So from where the resistance level is right now to the level is a healthy 200 pips. So just be patient here again. If you're looking to confirm the entry, here on my 4-hour time frame, you can quite clearly see that we are seeing buying sentiment. On our longer term part of the chart, you can quite clearly see everything blue. However, intraday consolidation. That consolidation is happening on the Asian session. Let's see what happens when the 8 a.m. and 9 a.m. When you have the whole European zone trading together. Let's see if that volume takes it and picks it up and carries it even further today. If it doesn't, then there's more likely for price to consolidate or to pull back even further end of week, and we could see more profit taking. And subsequently, what you can do is take your 4-hour low and then your current high. You can see quite clearly here we have an evening star formation, up, indecision, and down. If it breaks below 23.6, look for further pull of profit taking back down towards the 38 and potentially the 50%, which will bring us back to prior high breakouts. So that's it, guys. If you are using this particular template, please back it up with sound money management, guys. Very, very important. I'll keep referring to it until you guys get it. Any of you guys out there who are interested in trading this particular template or getting your hands on it, you'll see an email address at the end of the this actual video that you can actually email us to. Otherwise, if you are trading today, please be aware we are going into end of week, so we could see a bit of consolidation across the board. News-wise, we have ECB President Draghi speaking this morning at 9:30 GMT, and we have Eurogroup meetings. Fantastic. So a long weekend, Eurogroup meetings. All the financial ministers of most of the EU countries will be gathering together to have a fat chat on your expense. Let's see what happens there. Then we have straight into this afternoon, we have a lot of news out for the Canadian market. The retail core month figures, as well as the CPI month-on-month figures. Then later this afternoon, we have a couple of MIMC MIMC members speaking. So there's going to be a lot of speculation, trying to decipher what they have to say. But that's it, guys. I hope you have a fantastic trading day, and I hope you have an even better weekend with family and friends. And I'll catch you guys first thing on Monday morning. Until then, you guys trade serenely.